Welcome back. I'm Pratap here. Today is 20 March 2025. In this video, I'm going to evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, please, all of you, please note we are providing complete free training on supply demand zone price action. You might be knowing it is a highly expensive training course, but we are providing complete free training and all the training lessons including advanced strategies are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. Here you have all the training lessons including all the advanced strategies are available here. You just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions mentioned at our Telegram channel. I provided the link to our Telegram channel in this video description. Please join at our Telegram channel. At the top of the Telegram channel window, you can find pinned messages. Click on the pinned messages. One of the messages are about the training instructions. So learn your course according to those training instructions. Then you will become a very good independent trader in the coming months. Please make use of this opportunity. Now let's get into our performance evaluation of the high liquidity zones generated by our NeoStock software in our yesterday's end of the day report. So we identified 13 high liquidity zones from daily and 75 minutes time frame, but we got only 2 trades today. And a couple of trades are violated, and we know that they are violated as per our lesson 16 concept when a zone can be violated. And first one is the successful, second one is the stopped out. Let us discuss. And first is the Nifty next 50. Nifty next 50 is gave very good profit. This is a 75 minutes high liquidity zone. However, software identified as a drop, 1, 2, 3, 4 base candles and a drop candle. And this 75 minute zone is fine tuned with 15 minutes time frame. Here you have a 15 minute zone, drop, base, drop. This is the 15 minute zone. Maybe some of you may consider this is a rally, 1, 2, 3 base candles and drop. That is also okay if you are convinced this is a base candle. Either way it is okay. It doesn't make that zone will be the same. Okay, next go to the 5 minutes time frame. See, the 5 minute structure is not good. But this leg out somewhere it is picking the order flow. Did you notice? And that's why you should look backward. Here you have drop, base, drop, follow through candles. We have an excellent drop, base, drop and follow through candle. This is a 5 minute zone. This is the origin for this entire 15 minutes fine tuned zone. And this origin might be having a strong institutional order flow. The lesson 22 concept, what you learned. See, lesson 22, you have seen for the last 3-4 months or even more months, how much profitability they are giving. It is a new concept I developed. This concept is not there in the market. Every time these lower time frame zone origins are giving excellent profits. Such a potential concept it is. If anybody did not complete lesson 22, complete it as early as possible. Such a powerful concept. You should always use that concept as one of your main weapons for while analyzing the stocks. See today what happened? Prices entered into that zone and gave you a trade, and then sharply how it came down and finally it reached the 15 minutes target. Even that is also violated, and then there was a recovery, but by the time we already booked the profit here. And those who are using 1 minute trailing, maybe you would have got some more profit up to here. Even first of all, up to here, the profit itself is a more profit. See your 15 minutes target. You have drop, base, rally, or you may, if you are convinced this is the drop, base, rally, that way also you can draw. But this is the origin for, here also you can draw again drop, base, rally, LOTL zone. But this is the origin. But unfortunately, the origin is also violated. So powerful today. How much time when you got the trade? Say, let us assume you took a trade in this candle, 9:30 candle, and it reached the target at 10 o'clock. That means within half an hour, actually 45 minutes. Let's go to the 5 minutes, you get clarity. The first trade you would have got in, here it entered the price first. 9:19 candle you would have taken a trade. Those who missed, probably you got another opportunity in 9:34 candle. And finally reached at 10:06. So within 40 minutes the trade is completed. And how much profit it has given? Nifty Next 50 has given 14,817 rupees profit, which is 7.4% ROI. Return on the investment as per one futures margin cost point of view. And next one is ABC Capital. This is a stopped out trade. This is a 75 minutes zone. How our software identified? It identified it as a drop, 1, 2, 3 base candles, and again a drop and follow through candles. And this one we fine tuned with 15 minutes time frame. Here you have a 15-minute zone, drop, base, drop. This 15-minute zone again fine tuned with 5 minutes time frame. Drop, base. Actually, this is also you can draw zone like this, but risk is high. But the imbalance started from this candle, and this is the actual leg out. So to minimize the risk, even then the risk is 2.5%. Even then the risk is 2.5%. So you have to fine tune the entry so that risk will be within 2%. Approximately I am drawing somewhere here, probably you should take your trade. That way risk will be managed within 2%. When you manage the risk within 2%, including stop buffer, then I calculated. So with the 2% risk, fine tuning the entry, you will get a loss 2025, which will be 2% negative ROI you will get. See, this is performance calculations point of view, but in reality, maybe some of you might have avoided this trade due to heavy risk in this zone. Or some of you might have fine tuned maybe up to 1.5% level. When you fine tune more and more, it will be reaching the near to the distal line. But anyway, here we are checking how our zone is performing. Because it is stopped out. The zone is violated. So obviously you have to register the data. Okay. But otherwise the zone risk is very high. Those who planned the trade fine tune the zone, or some of you might have avoided due to heavy risk. Okay. So this is about ABC Capital. Next, remaining zones, quickly I will go through because I am recording very late today. And let me show you, maybe fine tuning the zones I am not in a position to explain. So this is the fine tuned area. Already we discussed idea, but this is the recent time price entered. I did not find fine tuned zone. 5 minutes. Up to 15 minutes I left it. But anyway, today we did not get any trade. Next, AU Bank. AU Bank already we discussed earlier, I guess. If not, this is having multiple order flows, but we didn't get the trade opportunity. HDFC Bank. See, HDFC Bank, we have a tested zone. This is the one tested already. That's why we didn't plan any trade. Because as per lesson 18 concept, this will be violated. So that way this zone is violated. HDFC Bank. Next, Max Health. It doesn't have any 15 minutes, this is it doesn't have any 75 minutes proper structure. This will be violated. Maybe today, it's not, maybe tomorrow, maybe it might be violated. Or if institutions decide to create a new 75-minute zone, they will push the market. At the time, next retracement, we get trade opportunity. But as on today, this zone has to be violated. Go to 75 minutes. Why I said this will be violated? See here, rally candle, drop candle, in between no base candles. We don't have a proper 75-minute structure here. Okay. And next one is NMDC. NMDC, here we have a fine-tuned 5-minute zone, but that is at the distal line, that is a lower time frame zone horizon. We have a 75 minutes horizon. Rally base drop. From this horizon, we have fine-tuned. But anyway, today prices did not reach that fine-tuned area. Next, PI Industries. This is also a daily high liquidity zone. We have fine-tuned the zone up to 5 minutes level. Today prices did not reach. So this is like a drop at the dynamic view, at the hidden body, drop, base, drop. Next one is Sonacom. This is also, we didn't get a trade, prices did not reach, but this is already a tested zone. But this is the origin, I guess. Let me check once again how I have drawn. No, it's not really origin. It is at the distal line, but it is already a tested zone. So that's why we didn't plan any trade in this. Next one is Cipla. This is a 75 minutes demand zone. Cipla is not having fine-tuned 5-minute zone. See why? Because this is a failed ERC candle. See how big it is. And then again rally, in between no base candles. So that's why I'm not comfortable with this price structure. I just left it. Today morning prices came near to the zone, but not. They moved up. And this is also having a 75-minute supply zone also. It is also having 75-minute supply zone. And it is already tested. This 5-minute supply zone is already tested here. And today it is violated. Because we know it will be violated. Because when a zone is having both demand and supply zones, either side we may get trade opportunity. Next one is ITC. This is a demand zone, 75 minutes fine-tuned demand zone. ITC also we did not get any trade. And JSL. JSL looks like we got a successful trade from the fine-tuned zone. See? Prices entered and we got a very good profit, right? But why I didn't track this data in my Excel sheet? Because we didn't consider this trade. Why? Because it is a tested zone. See? This is a tested zone. Below also is a tested zone. And this is the origin. From the origin it picked up. Here the trade plan is on this area. But unfortunately this is the area we didn't plan any trade. It is a tested zone. It should be violated actually. Maybe having more power, this zone. That's why it is not violated. But today you see prices went close to the distal line. But did you notice today what happened? Drop base rally is created. Maybe this zone may work as a high liquidity zone. Next time it may give you another trade opportunity. The possibility is there. But otherwise, if you know this is a high liquidity zone before, maybe after this price action, we are assuming. See, our assumption is 80% only based on the price actions. Software only can tell 100% accurate way. But 80% is good enough for us to identify it could be a high liquidity. Generally, when LOTLs are there, we are assuming it could be a high liquidity because LOTL scenario, more order flow will be added to this origin. This is the actual origin. And this is the LOTL zone. For this LOTL zone, this is the origin. That's why origin will get more institutional order flow. If the order flow is much stronger, next time again it will give another trade opportunity. This zone will behave like a high liquidity zone. At least 80% we can confirm. Many times 80% confirmation is working well. There are times it will be violated. So that is the reason why maybe this time we missed. Otherwise, see how much good profit we would have got in this stock. Maybe another 7 or 8% ROI we might have achieved. But anyway, this is the one we didn't plan the trade because it is a tested zone. And the last one is a PNB. This is a 75 minutes high liquidity supply zone. See, this zone is already tested here. This 5-minute zone. And today it is violated. Complete zone is also gone. It's completely gone. Previously also it is tested here. And this is a clear test in the recent time. From here it picked up and today it is violated. Not good enough to handle. Okay, these are the high liquidity zones we identified from the previous list. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.